This is James Fox with another video tutorial for QuickBooks Pro 2013. In this tutorial, I'm going to show you how to adjust the inventory when the physical inventory count is different from what QuickBooks has on file for your company. For example, if QuickBooks has 10 of a particular inventory item on file, but your physical inventory count only yielded 8 of those items, you need to adjust the inventory to account for those missing items. Now, before you can adjust the inventory, you should create an expense account called Inventory Adjustment. I have already created an account called Inventory Adjustment. I'm going to click on the Chart of Accounts icon here to show you the account. Now, here is my expense account called Inventory Adjustment. If you do not know how to create a new account in the Chart of Accounts, refer to Lesson 1-8 first, because you must have an account set up before you can adjust the inventory. Now, the reason why you will be using an expense account is because at some point in time, the inventory may have been lost or stolen. And if so, that is an expense to your company. Now, on the other hand, there are certain instances where the physical inventory count was higher than what QuickBooks had on file. And if that happens, you must lower the expenses. So in both circumstances, you will be using an expense account to either increase the expense if an item was lost or stolen, or decrease an expense if there are more items than what was anticipated. Now, the offsetting account will be the normal inventory asset account. So let's get started with adjusting the inventory. Now, to adjust the inventory, click the Vendors menu, then go to Inventory Activities, and then click Adjust Quantity Value on Hand. Now, if this is your first time creating an inventory adjustment, the reference number field might be empty. It's important to track the inventory adjustments that are made. So if the reference number field is empty, simply type in the number 1, because this will be the first inventory adjustment, and QuickBooks will keep track of the reference numbers from this point forward. Now, take a look at the Adjustment Type field. If you click the drop-down arrow, you'll see that there are 3 options, which are Quantity, Total Value, and Quantity and Total Value. For this example, we are only adjusting the quantity. So I'm going to select Quantity. In the Adjustment Date field, enter the current date. Now, in the Adjustment Account field, select the Inventory Adjustment account that was created for this purpose. Click the drop-down arrow, and once again, here is my Inventory Adjustment account. It is an expense account. I'm going to select this account to be used. Now we must find the items that need to be adjusted. So click the Find and Select Items button. If you have a long list of items to search through, you can simply type in the name of the item that you want to adjust in the Find field, and then click Search. Once you locate the item, place a check mark in the far left column next to the item that's going to be adjusted. After you have selected the items, click Add Selected Items at the bottom right. Now, the item has been added. The name of the item is in the Item field. There's also a description if you entered in a description when you created the item. And the 3 most important columns are the Quantity on Hand, the New Quantity, and the Quantity Difference. We're going to assume that Joe's Landscaping performed a physical inventory. And during that physical inventory, it only found 1 dozen of the pink roses. However, according to QuickBooks, the quantity on hand is 2. So in the New Quantity column, enter in the new quantity count that was taken during the physical inventory. So I'm going to assume that there was only 1 dozen of pink roses when the physical inventory was taken. And then press the Tab key on your keyboard. Now, if the new quantity is lower than the quantity on hand, you'll see a negative number in the Quantity Difference column. So basically, what you're saying is this. QuickBooks showed 2 items on hand, but the physical inventory count proved that there is only 1 item on hand. After you have entered in the new quantity in the New Quantity column, click Save and Close at the bottom. Now, when you create your income statement for that particular period, that inventory adjustment will be listed as an expense. So I'm going to create an income statement by clicking Reports, navigating to Company and Financial, and then selecting Profit and Loss Standard. So here is a very short income statement. Keep in mind that Joe's Landscaping is a fictitious company, and under the expense category, you'll see an inventory adjustment for $30. $30 is the cost that Joe's Landscaping pays for each one of these items, and that information was entered when this particular item was created. And that is how you adjust the quantity count for your inventory. If you have any questions, please send me an email. Once again, my name is James Fox,